if you're making money, take it, right?
Absolutely.
Don't hesitate. That's the point.
Because this is not going to be a one-way street to 9,000 or 10,000, which people are talking about. Yes, I'm clearly bullish in the longer term, but in the short term, that pain is going to be there. Utilize the opportunity.
The opportunity. Rohit Srivastava is with us as well. Rohit, thanks for coming in. Good morning. Where do you stand? I mean, I remember we spoke on the 3rd of September when the market was up 100 odd points or so. You were back then. You said it's a dead cat bounce and it'll get sold into. The market did sell quite sharply after that, right? And then on the 8th and 9th, we saw about 250 points being added on, and yesterday and then today. Where are we now, you think?
See, we are in an overall downward trend, and it's going to have legs on both sides in different forms. But I think overall, the next 6 to 12 months is going to be a bearish phase. Then it's just a debate about how far down and what levels and so on. And you will have two types of counter trend moves: one that lasts for a couple of days or maybe a week, and the ones that last for several weeks, 3 to 5 weeks. So these are two types of counter trend moves that you try to determine. Right now, I think you're in the 5 to 8 days kind of scenario. I'm not so sure we are looking at a 1 month kind of rally yet, but we might get that maybe after one more sell-off in the market. But that said, we did get oversold close to the 75.40 mark. I think moment we moved above 77.30, it was a sign that we are bouncing back. And how far can we go? We can go somewhere close to the 8,000 mark, maybe around 8,090. We gapped down in August with a large move below the 8,100 mark. So that gap is up to 8,090. My sense is we won't get past 8,090 immediately. So somewhere between 8,000, 8,100, we will probably top out again and start selling off once more. We may retest the 7,500 mark. Whether we'll break it or not, we'll have to actually see. And then I think you might get another move up eventually, which could be a little more long lasting, maybe 5 to 8 weeks, running into October, November. So that's the general picture I have of the near term. But again, like I'm saying, whether you get a small move for a couple of days or several weeks, we're going to be part of an overall downward phase or corrective phase for the market that's probably going to go on for several months.
So, I mean, if that is the view, then I guess you concur with what Ambrish said, right? If you're making 10-15% with your trades and then short term, take profits. I mean, because it will give a lot of, there'll be a fair bit of volatility. Yeah.
That's how you'll have to deal with this market, because and you're going to try to anticipate which levels to buy into and which to sell into, and whether they are small or big. But in general, the case is to try and make gains and book them out, use opportunities on extreme selling to buy, and use opportunities on extreme buying to sell, and so on. And that's likely to be the case for quite some time.
Rohit, when markets get tough, you hear the phrase that this is not a trader's market. I don't know what that means. You hear that quite a bit. This is not a market where you should trade. Any thoughts on that?
Differently.
Or, yeah.
Definitely. This is the, when you're not a trained trader, which means there are two types of traders. They're the bull market traders. Market goes up, just keep buying, you make money. So typically for them, this is an impossible market. For people like me and my technicians who trade with me and use the techniques that we do, this is a perfect market. We hate it when the index is in a 200-point range going, making those small moves. We really love it if the market moves, 500,000 points this side, then that side, then this side, because we are able to capture it using the techniques that we do. So if you ask me, this is the best trading market. But for people who are used to only do, play one side of the market, only be on the long side, and are not able to, deal with the big moves, for them this is an impossible market. So it's really a question of strategy, not that it's become more difficult to trade.
Ambrish, you'd agree with that?
Yeah, surely. I would agree with that. For a trained trader, I think this is a great market. But then I think 99% of the people who are possibly watching this program may not be trained traders. But at the same time, don't mistake me when I said that 10 to 15% rise and I would exit. In the sense, I'm not looking for trading opportunities. In fact, whatever I would have bought at lower levels was meant for investment.
Rohit, what should one do? I mean, if you buy something and if you and you think, okay, I mean, there are various ways to do it, right? I mean, one is to what Amrish is talking about. But what happens if prices continues to drift? Let's just take the Tata Steel example. You know, the price was you bought at 260, 270. It drifted down to 220, 230, back at about 240. What should one do? Wait and say, okay, I'm only going to sell if I get my cost back, or get out anyway, because otherwise you're blocking yourself in with that. I mean, if you have limited capital, essentially.
No, well, that's mixing up investment and trading, just like Amrish also said. If you're investing, then your thought process is very different. You're looking at accumulating something on the way down. There are ways to do rupee cost averaging and actually, get into a trade in a way such that your average is much lower. But you have to be definite about that. This is the worst case scenario for the stock. Now, metals as a sector have been in a downtrend for a long time. We've been bearish on metals for pretty long. It's been a sell on rise all the time. The easiest target on every sell off. But I think for the first time, there's room for at least a good counter trend move. I think we discussed this last week also. So in that sense, this is probably a good time to accumulate metals. But I'm not saying long term. I'm only saying from a trade perspective, whenever you get that good rally, maybe in October, November in the markets, then I think metal stocks might actually outperform. We're already seeing some uptick in metal prices and commodity prices in general over the last couple of days. So I think that provides room for some upside in the metal stocks as well. So they might again be a good trade, but if you're really looking at investing, you need a different mindset. It'll form a small portion of your portfolio. Typically, no one would buy more than 5% of their portfolio into a single stock. So the portfolio impact is usually limited. And once you've taken a view that you want to be in, then you can average into it and accumulate stocks.
More than 5% in a single stock, Rohit. I mean,
that's a typical portfolio allocation.
Yeah, no, I'm just saying that, yeah, there's a case that which can be made. Over diversification, I guess, could protect you, but would not make you very much money. It could, but that's the argument against it. And so the difference between what you and Amrish are saying is that, just to take the Tata Steel example, I'm not talking about sector dynamics and it's different for each sector, etc. We all know that. But with you, if you bought at 270, price goes down to 240, maybe you would already be out of it because there would be a stop or something. Or if there was not, you'd get out anyway, right? I mean, and find something else to trade. Whereas Rohit is saying he's okay holding on to it. He would be. Just to use Tata Steel as an example, Rohit.
Yes, if you're an investor, you might hold on to it, provided your investment argument remains, and my view essentially overall has been that, we are topping out. That's been the argument for quite some time. I still don't think we are into a sustainable uptrend, so I'm not really recommending a Tata Steel as an investment. I'm recommending it more as a trade for the next cycle, simply because we are seeing maybe a near-term turnaround in the metal prices and metal cycle. Whether it will sustain is a completely different question. So you might consider there's value here and it should sustain. I'm not so sure right now. I probably don't think so. So I'll probably look at it only as a trade. But you're right that I would have a stop. So if I was looking at buying, for example, I did think Hindalco was bottoming out more than a week back. We got stopped out. And yesterday I reiterated the trade. So typically we'll take that 1%, 2% stop loss. If it drops 5, 6%, then once again we look at it and we get another buy signal, we take another 1, 2% stop loss. Because eventually when we'll make that 10, 20%, the risk reward ratio would be favorable, so you'd still have lost less and made up for most of it. So that's how a trader would act. But getting out on each instance to us makes more sense, so that we are able to manage those losses within the overall risk reward framework.
Amrish, you want to add anything?
You should not average just for the sake of averaging. I mean, if you're averaging, I think you should know what you're averaging into. And that's one of the reasons why a lot of investors, the retail investors start panicking when the market comes down, because they don't know what they have bought. But if you have that confidence level, then I think you should average and utilize the opportunity.
I think, I think it's used jokingly that a trading position which doesn't work out becomes an investment de facto. But I think a lot of people use that psychology as well. And I think it's quite harmful, especially when the broad market doesn't look very bullish. And if you buy something, it doesn't work out, it's a much better idea to just give up, throw up your hands and say, well, I got this wrong, and get out, right? Cut your losses.
Instead
of just averaging onto it in the hope that at some point I'll recover my losses. Unless, of course, you were sure about what you were buying.
Absolutely. If it's a trading position, then I think you need to have the discipline of cutting out when there's a stop loss. You shouldn't try and apply fundamentals to technicals and then justify as to why you should hold on. But then if you know what you're bought into and it's a fundamental buy, then I think in case it falls for whatever technical reasons in the market, I think that should be utilized as an opportunity.
By the way, this technicals, fundamentals, I basically broadly get the point that we should not mix up both. But I know many veterans who are fundamental analysts and who look at the value of the business and what a business is worth, but they all look at charts as well. They don't talk about it on TV, but they do look at charts, not as extensively as Rohit is talking about, but they do get a, yeah.
In fact, they look at charts possibly for the, like a better entry point and a better exit point.
Yes, exactly. That's what. Not for trading, but for that. Anyway, 78.43 odd is what the Nifty is at right now, 53 odd points or so. The Sensex is up 185 so far, holding on, and that's where we are. Rohit, anything else? You're bullish on gold. The last you said you should you should buy a gold ETF because gold has bottomed out, and I think you suggested the BlackRock ETF, right? Gold miners ETF. Apart from that, any other opportunities, trades you want to highlight? Yeah. Go on.
So very short term, I think we're still looking at metal stocks as being an outperformer, and gold essentially a little more longer term, because within metals, I think gold is looking like it's probably ending a 2-year kind of bear market. So if you're less aggressive, you probably would be in gold ETFs or buy hard gold, which Indians in general anyway do. But if you want to be a little more aggressive, then you look at gold miners, and the DSP BlackRock was a good option to actually expose yourself to global gold miners. And in a sense, it also gives you a positive exposure to the rising USD INR because it's an external holding. So that said, that's one play. Apart from that, I think we're just looking at trade. So metal stocks, or else some of the stocks in the large caps which have fallen in what we call 5 waves could give good retracements. So some of the stocks I looked at yesterday were Mahindra and Mahindra and BHEL, which I think can give you some good counter trend moves in the near term. But these would be just for a couple of days, 2-3 days time frame as we head towards the 8,000 mark, not beyond that. So we'll be looking at those as very short-term trades in some of the large caps.
So metal stocks, Mahindra and Mahindra, you said, right?
That's right.
And BHEL. Okay. All right, fair enough. Amrish, any ideas?
In fact, it's been across the India building story, including metals. So I've been buying into Tata Steel, Nalco, Hindalco, SAIL. Among the capital goods, there's been BHEL, which had cracked majorly, L&T. Among the autos, it's been Tata Motors, Maruti when it fell to levels of closer to about 4,000, 4,100. So, I mean, these are the ones in the large cap ones, including, I mean, the PSU banks, where I was negative for the last 10 to 12 months. But now, at the current levels, I mean, especially the levels where it had fallen in the last week or so, I mean, I found that, I mean, quite attractive. And I was buying into PNB, Bank of Baroda, Oriental Bank of Commerce, SBI. So these are a couple of them which I had picked up.
Okay. But of course, you created the cash to buy these, right? I mean, that's the first point. Just one quick point on metals, Amrish. This Nalco, Hindalco sale, etc. Now, we don't know where what is happening in China. Maybe it's not a catastrophe, but maybe it'll get worse, and demand and global prices for these commodities will remain very subdued, and growth will remain subdued, etc. Are you fairly confident that these are the lowest that these prices will see? Or you are buying these because you think, well, they've fallen so much in a very fast in a straight line. They might go lower, but before they go lower, I'll get a reasonable bounce. And that's what I'm in it for, these metal stocks.
No, I'm not really looking at that short-term bounce. In case I get there, I'll utilize the opportunity. But then, generally, one thumb rule which you should always follow is that whichever sector is doing very badly, and it's done badly for a while. So basically, the down cycle has played out decently well, but you don't know as to how much more it can go down. But already, I think most of it has happened. In that case, you should actually buy the leaders in those specific sectors. And the leaders out here are clearly Tata Steel and SAIL in steel. And when you're talking of aluminum, it's Nalco and Hindalco. So I'm actually getting into these from a longer term perspective. I'm not looking at the next 3-6 months. I'm looking at the next 1 year plus, because possibly the cycle should start turning around in the next 15 to 18 months. By which time a number of weaker players across the world, I'm not talking of India, across the world, I think will shut down. And that's when actually you have the cycle turning up.
There's Tata Steel, Hindalco and SAIL, you said, right?
Yes, and Nalco.
And Nalco, yes. Yes, Nalco as well. Okay, got that. Gentlemen, thank you very much. Thanks for coming in, Amrish and Rohit. Appreciate your thoughts here, as always.